Welcome back. In today's section, we are going to learn about technical analysis. Technical analysis, why it is so important to know about technical analysis in financial analytics. So, in this today's section, I'm going to cover contents introduction to technical analysis in financial analytics, application in financial analytics. When it comes to the technical analysis, think of stock market like a big public notice board. Every time investors buy or sell, they leave clues. And technical analysis is all about reading those clues. Once you understand how to read those clues, you can be perfect in suggesting whether to buy or sell the stock. Technical analysis is a method where we use it to evaluate shares by analyzing the historical price movements, trading value, and chart patterns. Unlike fundamental analysis, which only focuses on a company financial health and intrinsic value, technical analysis assumes that all known information is already reflected in the stock market. The, the technical analysis is widely used in financial analytics to forecast short-term price trends, identify the entry or exit points, and support the trading strategies. The tools that we use to do the technical analysis is technical analysts use charts, indicators, and patterns to identify the trading opportunities, manage the risk, and time market entries and exits. It is especially popular among the short-term traders, and it is a vital tool in financial analytics for understanding the market sentiment and momentum. Technical analysis in financial analytics. There are three common principles that need to be followed in financial analytics when you are going with technical analysis. Market discounts everything, which means all factors like economic, political, psychological are already priced into the market. Price moves in trends. Securities tend to move in identifiable trends, uptrend or downtrend or sideways that persist over time. Historical repeats itself. That means price patterns and investors' behavior tend to recur, allowing analysts to predict future movements. These are the three core principles that we are going to follow to read the clues in the market prices and to do predict the next move of the stock or share. So there are different indicators that we use in the technical analysis in regard to the financial analytics. When it comes to the trend indicators, it shows the overall direction of the market. It means that the market is in uptrend, the market is in downtrend, or the market is in sideways. And we need to go with momentum indicators, which measures how fast prices are moving, indicating the strengthening of the trend. Volume indicators, which shows how many traders are participating. Volatility indicator shows how much prices are swinging. When it comes to the chart patterns, it identifies the repeating shapes in the charts that hint at future price moves. Support and resistance, which supports where the prices tend to stop falling and resistance where they tend to stop rising. These indicators will help us to identify the future stock prices. The key tools and indicators in technical analysis. Trend indicators we used to find out using simple moving average methods, exponential moving average methods, and these all moving average methods we use to find out the trend indicators. To identify the moment indicators, we use relative strength index, we use stochastic accelerators, and to identify the volume indicators, we use on-balance volume and volume moving averages. To identify the volatility indicators, we use Bollinger Bands, average to range. And coming to the chart patterns, we depend on head and shoulders, we depend on double tap or double bottom and triangles. And for support and resistance, the price levels where buying and selling pressure historically resolves the trends. Where we are going to apply this financial analytics. So we are going to apply this financial analytics in short-term trading. How technically helps it is to identify the optimal buy or sell points using the price and volume signals. Risk management, it stops loss and take profit levels based on the support or resistance. Market timing, it helps to determine when to enter into the market or when to exit in the market or when to exit from a position. Behavioral insights, it captures the investor sentiment through momentum and volume patterns. Backtesting strategies test trading models using historical data and technical indicators. This is how the technical analysis we need to perform in financial analytics to identify the future stock prices. Thank you.